I wanted to take a different spin on today's podcast because I felt like it was really important to talk about credit score. We don't talk about them enough. And to be pretty honest, there's not a regulation that says if you do this, then this, or if you don't do this, then this on credit score. So it's something that I talk about quite often with clients. Every deal we have to pull a credit report. And every loan company you work with would need to pull a credit report. So, fun fact, if you are getting multiple quotes from a loan officer and somebody tells you that you cannot pull credit to get another quote, that's wrong. You can. Typically, you have about 30 days to pull quotes from mortgage people. And that way you can now shop your interest rate without having to worry about multiple credit report pulls, because it is not your fault, right? That we have to pull credit on every single client in order to truly get a depiction of where they're at. Now, the next question on that becomes, well, will you only do a soft pull? Yes, we can do soft pulls. But what I have learned over the years is that soft pulls don't equal the full story. We've actually just done soft pulls in the past, got an accepted offer, pulled the whole credit now, and things have come up. The soft pull does a good job of telling you a little bit about the picture, but it does not give you everything as much as a hard pull does, which is why a hard pull is so very important to your lending. One of those things that you're doing when you are borrowing money in a mortgage, for example, is you're taking a couple $100,000 or more dollars and you're essentially investing that into a home, right? And so credit is what tells us how you pay bills. And now let's say you're a cash is king guy or girl, and you don't have any credit because you pay cash for everything. That's great. More power to you, because a lot of people just don't do that, where they go on to heavy credit card debt and things like that, which we'll talk about later. But in this respect, it does not tell a lender if you pay those bills on time. Yes, you pay cash, but do you pay cash late? Do you pay cash early? We don't know. So that's why building a credit score is so very important. You've heard me talk about on this podcast setting a credit score, and instead of using a credit card, maybe do a secured credit card with your bank. And if not, I'll refer you back to a podcast I did with my daughter earlier on where we did a secure credit card for her using all of her own money. And within, I think it was less than a year, at 18 years old, she had a 750 credit score by utilizing that. So there's great ways in order to be able to build credit. And one of the things, I have my phone out here because I wanted to make sure I was quoting it correctly. One of the things that I heard on a podcast I was listening to over the weekend was that credit scores are probably the highest they've been on a year-over-year basis. And that's one thing that's really exciting. In fact, I wanted to circle back on it because as of today, the average credit score is a 713. That's pretty cool. Back in 2024, it went from 691 to 716. So they're about 3 points apart, but that tells me that from 2024 to 2026, we're really holding steady on the average credit score for consumers being in that low 700s. Now, that's awesome, because when you're looking to get into a mortgage, you want at least a 620 score. Now, can we do loans for people under a 620 score? We can, but then now you are probably going to lean into a higher down payment, paying more private mortgage insurance, leaning on an FHA instead of a conventional, things like that. When your score is lower, you do narrow down the amount of actual loan products you can use.